The views expressed on the following program do not necessarily represent those of this station or its management.
This is the Stockwell Roueche Show, giving you real-time information you need to make educated decisions about buying and selling in the world-renowned Twin Cities. Now your hosts and real estate experts, Jason Stockwell and Josh Roueche.
Money, money, money. That's the topic of the day. So if you like money, hate money, want money, need money, you should listen in to today's show. I'm Jason Stockwell with RE/MAX Results.
Josh Roueche, RE/MAX Advantage Plus.
Special guest today is in-house Sean Bloomquist with Pine Financial Group. They are a hard money lender. Their slogan, if you will, their motto or their quote on their card is home of the 100% rehab loan. So very unique niche market there. Welcome, Sean.
Thank you.
We have a great partner, Ben Nelson, Farmers Insurance, who will be talking about insuring something that is not owner-occupied and how that works if you are looking to get into the investment game or are already in the investment game. Welcome, Ben.
Thanks for having me, guys.
And we have Lisa Swanson, great partner with Envoy Mortgage, who took time out of her busy day to come and do the show here because I know it is very busy. Right, Lisa?
Very much so. Yep.
Welcome,
nice to be
Lisa.
here. Thanks.
Yeah.
Lisa, do you have a middle name that you would like to tell us?
Oh, yeah. I
Middle
just
name?
wanted to mention my NMLS number, 261955, to adhere to compliance.
Yes.
Nice.
So welcome, Lisa. So
Thank you.
Lisa will be giving a mortgage update on the lending of the, I don't know if we should call this show, or we should separate it into normal lending and
Hard money.
and
Not
hard
normal.
money lending. Yes. So we have a good guy and a bad guy. No, I'm just kidding. So Josh Roueche.
Yes.
What's happening in the
You know
real estate
what?
market? Quick update.
We've got some changes taking place. We've got this time last year we're down 8.4% in new listings from last. I mean, this is the weekly.
This
stats
week
that come- yeah,
of last
this week,
year,
right.
we're down. Okay.
So and then pending sales are up 32.8%, and our change in inventory is up 2.8%. So basically, what we're seeing is we're not seeing a lot of people putting their houses on the market based on this time last year.
Yeah.
We're down from last year.
Little tricky numbers there if you're listening at home and if you're actually thinking about this and you say, okay,
It is tricky.
The last week or the same week last year, we're down 8% in new listings. So we're down in new listings. However, our pending sales, meaning listings going
Just
under
going
contract, are
crazy.
up massive, 32%. However, we're still above the inventory that was on last year
So
at
those
this
are
time.
a little bit tricky.
Could have been that there's just last year there was a lot of houses just sitting through the winter because it was such a horrible winter. I think that's what the deal is, why those are a little conflicting on some of those statistics. But anyway, pending sales is the kicker on that one, up 32%. So I talk to agents all the time. Josh talks to agents. We're out in the field with people, and the multiple offers are
And they're crazy. They're
going in full force right now.
That's why if you don't have a plan in place right now and you're not talking to a real estate agent and you want to buy, now's the time to actually set aside some time, talk to somebody, get a plan put together, and then probably talk to a loan officer as well to find out what you need to do when the time is right for you to put
Yep.
them.
And I'm seeing it. People are planning ahead. You know why they're planning ahead? I think we called this out, Josh, on a show about, I don't know what show it was. We called it out where renters are going to start getting sick and tired of every year jacking their rents up over and over again. And I had a renter call me yesterday and wanted to schedule a meeting immediately. So we got this morning, we had a meeting. And
well, they're wasting away their money, and they're not putting it and getting
their lease is up in 2 months, and they know the rent's going to go up dramatically. And they said this is enough for what we're getting. We're paying $1,500 a month. It's going to go up 16 and a quarter, and it's an apartment, and it's not even a house or and it's all these things. So they're sick and tired of it. They have some credit issues. Warren Bauerfeld with Minnesota Credit Consulting or Minnesota Credit Repair, who you can find him on our Facebook page or on TalkTwinCitiesRealEstate.com, is actually going to be helping them. But they're doing a plan. So they finally reached the point of, everybody reaches that point where you're paying, and you're like, what the heck? When enough is enough, I'm going to come up with a new strategy here. And that's what they're doing. It's a year plan, but they're in on it, and they're going to do it, and they're going to increase their score. And actually, it'll help them either get a better rental because the credit score is low, or ideally buy a home as their plan, as their goal. So people are finally doing that, which is great to see. And however, if you're a landlord, you also want to maximize your profit, but if you have good tenants that are paying, don't drive them out by raising them too much.
Right.
Try to be a little bit reasonable so you don't lose a lot of good people. That's the kind of the fine line that you have to walk as a landlord.
If you don't build your own dream, someone else will hire you or have you spend money to build their dream. So
Yep.
Anyway, that's a quick
I
quote
like it. I like
from
it.
one of my friends on Facebook. So
If you don't build
Right.
your own dream, someone else will build. You'll help someone else build theirs.
Yep.
Yeah, I like that. That's a lot.
that was kind of cool.
So that's the market update. Good out there. Call us, email us. Call us at 651-400-0773, 651-400-0773. TalkTwinCitiesRealEstate.com is the website. Facebook, look us up on Facebook. You'll see videos, links, and all kinds of things on there. We are on Twitter. And,
Yes, we are.
I don't know much about Twitter, but we are on Twitter. So
Have you tweeted yet?
At TwinCitiesRE. No, not .com. Sorry. At TwinCitiesRE. That's how foreign Twitter is to me. I'm not huge on Twitter. But
hashtag.
Hashtag. Oh my gosh. Anyway,
Pound sign.
pound sign. That's
Right.
easier.
Right.
So, with our guest today, Pine Financial. So, if you or someone you know has ever thought about investing in the real estate, and this is key, this is critical for you. So, I'd advise listening or checking these things out here, because it's easy to sit back passively at your job and say, "Oh, I'm dumping money into my 401k. I'm dumping money into my 401k." That's the easiest thing to do, and some people don't even do that, even though they're getting a match. Investing is good no matter how you're doing it. It's a risk, but it's good because you're planning ahead, which we talk about all the
Right.
time. However, the stock market, and you're seeing the returns. If you do have a 401k, great returns, great returns, great returns. The stock market, if you listen to the show that is right after us, they talk about a potential downturn in the stock market. It's inevitable. The stock market will not have an infinite increasing. You can't increase forever. The stock market won't. It never has, and it won't. So if you're looking for alternatives, this is the great show, because it gives you the ability to do the alternative without having hundreds of thousands of dollars in the bank to go and invest in real estate. So that's the topic here, and the ability that we can do it with hard money. And it's in hard money. I don't know, does anybody have the definition, or we can give you guys the definition of hard money soon here of what it is. Perception is, Sean, maybe I should let Sean go here now because he's been waiting here. So Sean, welcome, Pine Financial. You are a hard money lender.
Correct.
But you're a nice guy, right? So that's what
He's
you
a
want to
good
get
guy.
across.
He looks like a nice guy.
He's a very nice guy.
told,
Local
yeah.
guy, lives in the Twin Cities here, and works for Pine Financial. So maybe give us a rundown of what your company is, how you got started, and just kind of your story.
Okay. So Pine Financial started in Colorado in the end of 2008, started 2009. A guy by the name of Kevin Amolsch started it. He had a background as a broker and everything else, and had briefly worked in it when hard money was kind of still in an infinite stage where not many people really knew about it, and still a lot of people don't know about it, but they really didn't know about it then. And he found that niche market and started it as being an investor himself, and realized, you know what, this is a great way for people to get into it. Like you said, you don't need hundreds of thousands of dollars to do it. You just need enough to sustain the project at a time, and if you've got enough in reserve, you can do a couple projects at a time, which is kind of the goal of using us, is to do multiples at a time instead of being limited to one or two at a time. So it started in Colorado then, grew very quickly. The way we do it is it's all privately raised money, and we loan it out to investors looking to do flips or buy and holds, and we've actually got into new construction now as well.
Nice.
It's awesome.
So if guys are buying a property and the numbers don't work to be a flip, maybe it takes too much in rehab to make it worth anything down there, they will tear it down and put up something new. And you're seeing a lot of that in South Minneapolis, Edina, and everything else. So we can fund that as well, just like a bank would do it. Construction loan, we do it the same way. Obviously, we're a little bit more expensive than a bank, but we're also investors as well, so we understand how it all works, and we can be flexible. We don't have bank regulations like a bank has to meet. Because we're privately raised, a private company, we can adjust things if needed. So they did that big in 2008, going forward in Colorado. And then in 2012, they decided we got to hit another market. And Twin Cities and Denver are very similar markets.
I've heard that.
They joke about it, and you guys know Jeremy Rupp. He's probably said the same thing, where it's almost like having a crystal ball as to what's going on here. It's about a 2-year difference in markets, but everything that happened in Denver is happening here just on a little bit of a delay.
Right.
So they were seeing new builds and teardowns back there in 2 years ago, and telling people here, you know what, this is the next thing that's coming. Heads up. You know, if you want to make the next jump up, hit the new construction, and that's exactly what's happening. So they started here in January of 2012. The challenge for them is they needed someone here on the ground that they trusted to do the inspections of the property.
Yes.
They don't loan out the money and give them all the rehab money and say good luck, because we'll never see the money again. They'll end up in Vegas or whatever. So they needed someone on the ground they could trust. Kevin, the owner, his wife and my wife are sisters.
Oh, here we go.
So he had a nepotism connection, and he said, I need somebody I can trust. I have a background in construction and finance, so it molded well with what they were doing. Yep. And he said, I need you to start doing the inspections to start, and then eventually we're going to have you start doing the originations.
Nice.
So when we loan on a property, we take a look at it before they actually buy it, because we want to see how beautiful this thing looks to start when it's full of mold or whatever else. And then we have a baseline for what they need to do. So I go out, take a look at the property to start, and then all through the process, we're taking a look at it and releasing draw money to them for their rehab so that they can keep the project moving. So I did that for most of 2012, and then January 2013, I started doing the originations. So now we originate roughly to 100 to 110 loans here a year.
Nice.
And I still look at every property, whether I'm the one originating it or one of the guys in Colorado originate it, because they do some of the business here as well. And I'm dealing with all that. And then we have free classes around town that we do a couple times a month. We have a happy hour that we do once a month based on networking. It's free to come, education, networking, get some deals done.
Yep.
That's awesome.
So things are going good.
So when we get back, we're going to talk more with Sean Bloomquist, Lisa Swanson, getting the update on the mortgages, regular mortgage industry, I guess you could call it, and then Ben Nelson on how insurance is important on some of these as well, and I know Sean would agree with that as well. So you're listening to the Stockwell Roueche Show. Money, 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 hard money lending. What is it? How does it work? Is it for you?
Josh Roueche, Remix Advantage Plus.
And we'll be back. Josh was jamming. He was jamming to the song. So we'll be back shortly. Thanks for listening to the Stockwell Roueche Show.
But it's gonna take money, a whole lot of spending money. It's gonna take plenty of money.
Welcome back to the Stockwell Roueche Show. I'm Jason Stockwell with Remax Results.
Josh Roueche, Remax Advantage Plus.
That song reminds me of a phrase.
Well, that means my sophomore year, man. I love that.
You got to spend money to make money. That's what they say. We're talking about hard money lending. Sean Bloomquist is here with Pine Financial, Ben Nelson with Farmers Insurance, and Lisa Swanson with Envoy Mortgage. Sean gave us an intro of how the Pine Financial started and what they do. Lisa Swanson, I wanted to ask you an update as far as the lending industry and how things are going to Envoy and what's happening in your world and mortgages.
Okay.
Rates are still phenomenal here.
Yeah, absolutely. Well, the spring market is really gaining momentum. Applications nationwide have hit a 21-month high in the third week of improvement. So I would assume they'd continue to improve until the spring is over, really, until the season dies down slightly. Last week, much weaker than expected jobs data help really delay the Fed rate hike. Fed action later in the year would help mortgage rates, lower now. And then the latest, the Fed commentary points to future rate decisions being data dependent. Experts still disagree on when the Fed will act, or if it even will be in 2015.
Wow! So we all went into the year thinking rates are going to go up, and now it's questioning whether it's even going to happen.
Well,
and I think that
these guys
did
keep
we
talking
call that
about
last
it.
week, Josh?
We did call that.
Well, actually, we didn't. That guy that we
read.
That we read. He's very good, by the way. Very smart guy. He told us about he listed all those countries off. If you remember last week, that
was a lot of countries.
Reduced.
Yeah, it was a lot.
And only one's even talking about a rate hike is us and the UK.
Right.
And that's why he said he doesn't think it's feasible at all for June. And September might be off the table as well for the rate hike for the Fed.
And then all these economists, they keep having this argument, and it just keeps going, and it's just crazy.
I don't think they want to do anything to mess up what's going on. A quick question on a side note. So if you're listening out there and you are considering, so a lot of sellers are saying, well, I might sell, or I like the place, I might refinance and get a better situation. We've had an experience lately with 3 separate occasions in the last 2 months where we go and meet with the seller and to talk about selling their home and give them a market analysis.
Okay.
They say to us, we're really worried about this because we had an appraisal done when we were going to refinance, and the appraisal came in really low, much lower than we expected from our lender, and they didn't include any of our basement beds, baths, or square feet at all in the appraisal. And they show me the appraisal, and I see it right on there. And one of them was about $80,000 lower, the appraisal that I saw, compared to what I thought the market was of this property, and my agent thought the market was of this property.
Okay.
Is that something that when you have a loan and you're going to refinance the loan, is it a different type of appraisal, or is there a reason, or is it something they're just being really conservative on, or what's going on there? Do you have any idea?
Yeah, that is good. Well, first and foremost, the below square footage is not considered in the appraisal. So if you have multiple bedrooms downstairs, it doesn't necessarily give you additional value. You will get credit for having a finished basement or a partially finished basement, or no credit, negative credit for a non-finished basement. But your question...
Is that true, really? You don't get credit for your below living...
Right. I mean, it's a separate category as to the percentage of finished portion, but it's not counted in the bed bath count. So you'll find some unique properties that there's no bedrooms upstairs, and those folks are going to have a really hard time refinancing or getting a good appraised value because there's no comparables that are similar to it. Okay. So keep that in mind, when doing remodeling projects as well. The above ground square footage, that's really the moneymaker really for comparable homes, and that's what we use. But the refinance appraisal isn't any different than a purchase.
Really? Okay.
No. The only difference, I guess the only difference is when one is buying a home, they've signed a purchase agreement saying
with
that
the price on it.
Yeah, and they're saying they're willing to pay that amount of money.
So that might help the market.
It's going to influence the appraiser a little bit because there's obviously a buyer, so there must be value there. But the one thing about a purchase that's different than a refinance, I guess, regarding the appraisal is aesthetic value. Aesthetics are not taken into consideration at all. You'll get extra points or extra, I guess, value for finishings or, nice wood floors or a fireplace or, certain amenities. But, when one's buying a home, it's to their discretion. If, you might have a house priced $80,000 higher than the comparables, and because it's beautiful and because somebody walks in and just feels it's perfect for them. But you do have to have the data to support that other sales are happening similarly.
Okay.
Does that make sense?
Yeah. So if you're out there and you've had low appraisal come in either on your purchase or your sale or your refinance, that is something that you don't need to worry about as much, but it just means you won't be able to refinance. So then these people now are actually considering selling because they're not able to refinance and they can actually buy at a lower rate than they're in.
Sure.
That's what we're dealing with. So it actually helps us realtors, but I was just curious how it affected the folks out there that may be in that position where they're saying, well, we might stay and refinance, but unfortunately we're not able to, and now they're worried about their sale price.
Well, and a lot of folks need a little bit of equity position to refinance too, where, to pay off their mortgage and that type of thing, so that could kind of vary.
That might have factored into it too.
Yeah.
Okay, cool. Well, thanks, Lisa Swanson, Envoy Mortgage, for the update and the info. You can find Lisa's information at TalkTwinCitiesRealEstate.com, TalkTwinCitiesRealEstate.com, Facebook, Stockwell Roueche Show, or call 651-400-0773, 651-400-0773. And back to hard money lending. Ben, did you have something you wanted to add on that or not? Did I miss something on that? With refinancing and appraisals?
No, I was just going to mention how in insurance we go off of above ground square footage as well and not below ground.
Oh, really? Okay.
Yep. I don't know the reason behind it. So we still take into account that your basement is part of the house and the valuation that we do, but for some odd reason, I don't know why,
Could
we
be
don't
the
count
appraisal
in.
standards around the U.S.
And it could be. And,
And it is different. It is a different appraisal. I'm looking at it on Realtor.com, and it does say it depends on the area, and it depends on the neighborhood. So if the neighborhood does have a lot
all
of
slab houses,
Yep,
and you're going to
yep.
have different. Yeah.
yeah,
that makes
so it
sense.
just depends on the neighborhood and the guidelines in the state for appraisals. So.
Yeah. So cool. Well, that's good. Well, thanks, Ben. Thanks, Lisa. Lisa, we have Sean Bloomquist here, hard money lending. Question: What do you have the definition of hard money?
Hard money loan is specific type of asset-based loan financing through which a borrower receives funds secured by real estate. Hard money loans are typically issued by private investors or companies, whereas a traditional loan, like I would typically do, we always get our money from the government, Fannie Mae, Freddie Mac, Ginnie Mae, whereas obviously hard money is private company
end.
investors,
Okay.
like Sean.
So the question then is, you don't need credit score. That's what we talk. So that's a big deal,
It's just
Sean.
different guidelines, right?
So let's say I have a foreclosure
Yep.
and a bankruptcy, and I'm recovering, but I'm not. I talked to Lisa, and Lisa says, "Oh man,
She's got to follow the guidelines.
No, I would say let's put a plan together, but next year would be perfect.
Yeah, you've got your 3 and your 7 years.
And let's say I just want to invest right away, and I got this great sweetheart deal on this house right now that I know I can get. Walk me through that scenario. If I have a scenario where I need to move on it now, and then in a year I can go to Lisa and get help, but I got to do something now.
loan. Right.
So your credit score, you're right. The credit score really doesn't matter. We do look at credit, and the reason we look at it is...
Oh, you still do look at credit. Okay.
We do, and the reason we do is we still, even though it's 99% asset-based, we still have to look at the borrower themselves to make sure they're not getting in over their head.
Right.
Okay.
So we do look at their credit to make sure, A, they're paying their bills, and they don't have any judgments or tax liens.
Right.
Because if they have the judgments or tax liens, then they
You get
become our
attached
problem.
right to the property.
Oh,
Yeah.
good
And if
point.
they can be attached to the property, that's our biggest concern because that's
Right.
all we're concerned about is the
Right.
property.
Yeah.
So that is what we do look at. The main qualifications for someone is going to be, do they have some reserves built up, some liquidity in the bank to sustain the loan, obviously. And once we've loaned our full loan value, if you go over your budget on the rehab, we're not going to be able to loan you any more money. And I want you to succeed. I want you to get done and get rid of this house because I don't want it back.
Right.
So we want to know that they got a little bit of money to take care of any overages so they can get rid of the project
An exit
and move
strategy.
on.
And
Yeah,
it's
exactly.
a construction
Exactly.
project, folks. So if you've ever invested or you plan on investing, just know that the timing that you project is usually not enough, and also the budget you project is usually not enough. So we call that a contingency fund that you want to have available so that if an unforeseen happens or if there's a delay or in the process of the construction or rehab, that you have a way to do it. Because if Sean and Pine is maxing you out on the project, you can't go back and double dip on them again.
Well, they're looking for an exit strategy too, just
Yep.
in case that does happen, that they can get out of it and still get the money back that they invested in.
Exactly.
Yep, So you got to have some money in there to do that. But it's kind of fun if you go through a project. You have this great expectation. You have to write out your plan, right? That's your goal. You write out your plan, your goal, all that stuff on the rehab, and it doesn't.
It doesn't
go
always
that
follow,
way.
right?
I mean, very rarely it does. Sometimes it does, but very rarely does it. So, but then that's why you have to make sure your numbers are good, and that's why they've done hundreds and maybe thousands overall. Pine has, so they're going to actually be a good resource for you to go into a project. They might say, hey, you know what, this isn't a good project. We won't do this project. You should actually reconsider doing it because it's not going to make you money if we're not even going to be involved. So.
That's what I love about our show. I mean, what we do is educate, and I think bringing on someone like Sean and letting our listeners know that there's other options out there for you. I think that's just great. I'm sitting here taking notes because I know a little bit about this, but I don't know, and that's great just to let you talk and let people hear what you have to offer and what you guys are all about. I love it.
Sure.
Yeah, it's a good alternative, and it gives someone an option when they've heard that they don't have an option.
Right.
So you can call us. You're listening to the Stockwell Roueche Show. I'm Jason Stockwell with Remax Results.
Josh Roueche, Remax Advantage Plus.
Call us 651-400-0773. Go to talktwincitiesrealestate.com. You can find the podcast there for past shows and also the YouTube to see everybody on there as well. We'll wave on the camera right now, actually, on this YouTube. And you can find us on Facebook as well, Stockwell Roueche Show. And we'll be back with more on hard money lending with Lisa Swanson, Envoy Mortgage, Sean Bloomquist, Pine Financial, and Ben Nelson, who is chomping at the bit to share information about Farmers Insurance and what they do for remodel projects. Thanks for listening.
Leave now, he's to and fro. He doesn't like you when the girls go. Has he got enough money to spend? I will buy you a garden where your flowers can bloom. I will buy you a new car. Perfect shape.
Welcome back to the Stockwell Roueche Show. I'm Jason Stockwell with Remax Results.
Josh Roueche, Remax Advantage Plus.
Give us a shout, 651-400-0773 or talktwincitiesrealestate.com is where you can find us. And we're talking hard money lending with Sean Bloomquist, Lisa Swanson, and Ben Nelson with Farmers Insurance. Some people may be sitting there, you might be sitting there listening thinking that you want to invest. You want to get involved in something. How do you do it? This is who you should reach out to if you're looking for something like that. Contact Lisa, contact Sean. And some people also may be asking, why do you have two lenders on there? And aren't they competing with each other? So I guess I'll ask Sean and Lisa, is it a conflict at all? Are you guys ever, how does it, or do you guys ever work with hard money lending? Do you ever work with regular lenders, Sean and Lisa? Because I don't see it as a conflict, because I see it as a totally separate scenario. But I want to hear you guys' thoughts on this. Because not that they were doing anything or giving each other evil looks in the studio here, but I just wanted to see what they thought.
Jason.
So Lisa, go first. What do you think?
Well, I think it's a nice compliment. Just with any, I deal with competitors all the time. If we all offer different products, and so if our clients are our first and foremost priority. So if there's something that I can't do, or it's not like within the box that the government will allow for us to finance on, Sean is a perfect resource for that.
When you say government, you're talking like a Fannie Mae, Freddie Mac type products, VA, government type loans.
Yep, all of our loans.
Normal loan. Anybody who goes
traditional.
So
we're technically all getting our money from the government.
Oh, don't say that. Do not say that, Lisa.
Now, they're not all government insured. But yeah, that's why the interest rate's based on the Fed,
So you out there listening, if you have a mortgage, what Lisa's telling you is that's a government mortgage, essentially,
basically,
right? It's
yeah.
a government
that's where the money comes from, right? The Federal Reserve sets the rate.
I know. We all just paid our taxes recently. We're all kind of in that mode of we love our government, right? So but anyway, so when you mean that it's a program or something that might not work for someone, they're trying to go through an FHA loan, or they're trying to go through and buy an investment property with Fannie Mae or regular conventional mortgage, then the alternative would be Sean on that, right?
Yeah, especially Sean, I had a question for you too, because one flaw that we would see, that not credit related, but based on income. For instance, if somebody is at a commission job but they haven't been there for a full 2 years, we can only use their base income, and we cannot use the full amount, and usually that commission is going to be a larger percentage of the base. How do you calculate income, and would you be able to lend to somebody like that with perfect credit, but maybe they're just in that situation where it's not been that full 2 years?
Yeah, exactly. We can lend essentially anyone, as long as there's not some drastic thing on their credit or whatever else. If they do have bankruptcy or foreclosure, it has to be taken care of. It can't be in process or anything like that. But once they're done with that, the income really doesn't have a big bearing on it. Okay. Like I said, the reserves are the biggest thing. The deal itself and the reserves, if you're self-employed as even an investor, you're only getting paid a couple times a year when your project sells, we can still work with that. As long as you have a good base behind you, a good safety net and reserves, we're fine with it. If you don't have any income coming in, you're going to have to show more in reserves, obviously. Yep. But the income really, it isn't, we look at it, but it isn't a determining factor really in any way.
So, Sean, real quick, can you give us an example of some, just don't give us names and addresses, but what's something that happened? What's someone that you've helped in a scenario that may not just be an investor going in and flipping a property, but are there any other scenarios where it might play in, or is that pretty much 100% of what you guys do?
Well, we don't work with owner-occupied property.
Okay.
So if somebody's looking to buy a house for themselves, that isn't
They
something
have
I could
to talk
do.
to Lisa
So
or
exactly, I would pass them off to someone like Lisa.
Yep.
And like she was saying, we can work in tandem on things as well. So we don't just do the fix and flips or the new construction. You can also do a buy and hold strategy where you get into a duplex, maybe needs some work. The only way this loan is going to work for you is if the house needs work. It isn't going to be a turnkey property or anything
So you
like that.
only
So
go
what
to
about-
hard money
so-
when it needs work.
Yeah,
Exactly.
what about like investors that have like several different projects they want to work on? They do have the exit strategy to do that, but they want to group together, say 4 or 5 projects that they have going on, investment properties. Can they do that with you guys?
We right out of the gate, the first time they work with us, we're not going to do 4 or 5 to start. We'll do maybe 2 to start.
Okay.
The biggest determining factor is it's always going to come back to the reserves.
right.
If you've got enough to handle 4 or 5 projects at a time, we can do it.
Yep.
We don't have a size limit on the project. We've funded deals for $25,000. Maybe it was just the rehab, all the way up to new builds that were over $3 million for development style things. So we don't have a specific box you have to fit in that way. But the other strategy that you can do, like I was saying, with like a duplex or something like that, you can buy the property, get the money to fix it up, and a rental rehab is going to be much faster than a full-on fix and flip.
Right.
You're
Yes,
not going to be putting in granite, new mechanicals, and everything else. You're just going to get it rental ready. Well, because our loans are short-term, they're only 9 months long, you're going to want to get out of us as fast as possible.
An end loan, and that's
Yeah, exactly. So then they would go to someone like Lisa.
Right.
It's just a rate and term refinance. They get out of ours very quickly, have hardly paid any interest to us, and they can get into a long term.
Government-backed
Fixed low
loan.
rate.
Exactly. Get some government money.
The other example, we all want government money on this show, right? The Patriots, all about that. No, I'm just kidding, guys. But that is interesting to think about. But anyway, that could be a whole show, right?
You're right.
Here's another tip for you out there. So if you are an investor, or you know an investor, or you want to do investing, and you have the money to do one, what I see an example of why Pine would be so valuable for people is, let's say I have enough money to buy a bank-owned property for $100,000, and I buy it, and I have $40,000 for rehab, and I use all my money on that project, which from start to finish, from the time I close and tie up my money to the time I resell it to someone, is 6 months. But in that 6 months, I found another one that I wanted to do, but I'm not able to do it because I don't have the cash to do it. So that's exactly where I think Pine would be a huge resource for people, like Sean talked about in the beginning of the show, able to do more than one at one time. Because if you're that type of investor who just does one project, and then when you're done with that project and it sells, you do another one, you're typically going to be lucky to get 3 done in a year. 3 projects in a year. If you want to do more, and the possibility and the potential is there for you to do more, and the deals are there for you to get, then you should definitely have someone like Pine helping you with that. So,
Well, I think what it comes down to when you look at a traditional, you got to follow certain guidelines, right? When you do commercial type stuff, and if you're self-employed and you're doing these things, you're an investor, you're more or less you're self-employed, right?
Mm-hmm.
And what do traditional lenders look at? They look at your credit score and they look at your 1040s,
Yep.
your tax returns. What I think a benefit that Sean brings is they really won't look at your tax returns as much as a traditional lender,
what do you have in the bank?
which is
What
one of
your
the
asset?
biggest things that these traditional lenders have to turn stuff down because they have to follow these guidelines, and that's something.
Because they're already preset for
Right.
us. I mean, there's not a lot of
Right.
gray. It's black and white.
You know who I blame that on? The government.
Yeah, that's.
So that's
Well, I have a quick question, Sean. So, what happens if your loans are only a 9-month duration?
Yep.
What happens after that time if you only have minimum qualifications?
Foreclosure.
Hey,
Outside of foreclosure, let's say one isn't ready at 9 months to get a traditional loan, what are their options, or do you just then extend your loan? How does that work?
well, here's the deal. Let me start to cut Sean off here.
Is that a bad question? Sorry.
9 months is the term of the loan.
Yep.
Do you know why they call it hard money? What happens after 9 months?
That's
Just kidding.
Yeah, exactly right.
That's
You're
why I
exactly
asked.
right. Yeah, we'll come pounding on your door.
Sopranos.
Yeah, exactly. No, to be honest, we're all investors. We've all done this. The last thing we want is your house back. That's not our end goal in any way, shape, or form. We want you to be successful at this, so you come back and get another loan from us.
And refer people and all
Exactly,
that. Yeah.
exactly. So 9 months comes around. Maybe the house is finished, but it's just not moving, or maybe you're getting close to the finish line. Whatever it is, we're going to have a conversation. Hey, what's going on? What happened here? Why is it taking so long? was there some unforeseen circumstance or whatever, we'll be flexible within reason. I mean, we're not going to bend over backwards to you know.
If you sense something's wrong and it's not going well, you're going to step and stop.
Exactly. I mean, if they really don't know what they're doing, we're going to say, hey, you know what? Just let us take over and let's
but
get
let's
this
say
done.
I say, Sean, you know what? I had unforeseen stuff going on. Can I get a couple more months? You can see that I'm making progress, and I have a sale plan in place, or
and they only break a few fingers for that first.
Yeah, exactly.
Then it's only my pinky.
a kneecap or something. Yeah. No, we'll be flexible, and I mean, our goal is to help you get rid of the property.
Yeah,
So.
that's good.
Sean, do people ever come to you just to have an investment property, so they do the flip and then they're going to retain it as an investment property, or are they always selling it after that 9 months?
No, they
retain it.
Yeah, they retain it. Like I was talking
Some
with the
people
duplex,
do,
they
right?
can-
It's
So
just various.
some people look
Sure,
to buy and flip,
sure.
and then some people want to retain, and then they'll go and say, "Hey, Lisa,
Sure.
I need a long-term loan on this." Because I couldn't get a loan on this going in because it was such horrible shape,
Right.
And or the bank wanted a cash offer, that's one thing you got to talk about too. So Josh and I, we get cash offers or seek people writing cash offers, and hard money is not cash in your pocket, but it's essentially a cash offer to a seller. So and that's very competitive when you're going for really good deals when you're buying investment properties. So. I'm Jason Stockwell with Remax Results.
Josh Roueche, Remax Advantage
You're
Plus.
listening to the Stockwell Roueche Show every Sunday here on AM 1280 The Patriot. We'll be back more with hard money lending. Thanks for listening again.
You got to do what's best.
Welcome back to the Stockwell Roueche Show. I'm Jason Stockwell with Remax Results.
I'm Josh Roueche, Remax Advantage Plus.
That song, Money Talks, reminds me, I got to tell a quick story. My son is 4 years old, he's in preschool. I drive him to preschool every morning. And one morning I'm flipping through the channels, and I flipped through, I'm flipping through, and I was going to go to the Patriot right away, but then I'm like, I'll flip through something else real quick just to see, and then come back to the Patriot, of course. But I flipped through, and a song came on, and it was AC/DC, Money Talks. And I had it on, and I turned it right away, and I'm like, he doesn't want to hear that. It might be too loud for him in the morning. He goes, Papa. He's in the back seat. Turn it up, or turn it back to that, turn it back to that, and turn it up. So I go turn it back, turn it up. And he listens to it. Katie, my wife, picks him up from preschool. She picks him up from preschool, gets home, and then I come home from work that night, and she says, hey, did you know that Asher learned a new song today? And I'm like, oh, gosh, here we go. I didn't mean to, And she says, yeah, he wants to sing it for you. So he comes out playing his air guitar. He goes, come on, listen to your mama talk. Come on. So he
your mama talk?
hears us say, like, listen to your mama, at home. So he still thinks that song is listen to your mama talk. It's so funny. But anyway,
that's how I sing songs, too.
And I'm not a singer, by the way. I hope you can tell from that. But so we're talking hard money. And got to talk to Ben Nelson, our partner with Farmers Insurance, because Sean, you guys require these properties are insured because you're the lender, just like
definitely.
anybody. Like Lisa gives you a mortgage. Lisa gives you a mortgage. You aren't getting that mortgage unless you have property insurance on that on the property.
Right.
Same with you guys, right?
Mm-hmm.
Protect that money. So Ben, how does it work on these? Because like Sean alluded to, and we talked about, these properties might be horrible condition. Where why would you even be able to get a loan, or how would that even work?
Well, a lot of companies won't take these properties because when the investor gets them, they're in such bad shape.
Right.
Like, I've picked some up where you'll go out and look at the property. Like, doors will be missing, windows will be missing, and you think
Shingles are gone.
You think, how
Boarded up windows, you name it. Yeah.
Right. How are we ever going to
Mold.
be able to insure this thing? Well, we've got a pretty unique product. It's designed for these properties that are being flipped. I'm sure, Sean, you see them every day. It's with a company called Foremost. So it's not a very comprehensive policy, just because we're not willing to put all that risk out on the line. So it's called a named peril policy. So everything that's on your regular homeowner's policy isn't all going to be in this. The big one for vacant policies, and you won't find this on any vacant policy, is we're not going to cover frozen pipes. Reason for that is a lot of people leave these houses vacant to foreclose on just to get away from them and let them freeze.
Yeah.
We talked about that.
See that all the time.
Yeah, but the thing is, if you're an investor, you're probably not going to allow that to happen. You're going to keep the heat on, and there's people going to be in there moving in and out all the time. So it's not too big of a
And you
risk
usually,
on
if
that
you're an
one.
investor doing a
You're going to
rehab,
check it out.
You're fixing the plumbing and putting new plumbing in mostly.
And the chances are you might be getting a house that already had bursted pipes, so you're going to fix them anyways.
Right.
Yep.
I know a lot of times, so I work with, I'm not even sure how many anymore, but most of them come out and they say this one was foreclosed and it does have bursted pipes. So they ask if we can insure it. We can say, yeah, we can insure that. Just we're not going to cover any bursted pipes moving forward on that property.
And you can do temporary insurance. So Sean has a 9-month term on his loan. You can do a temporary, or you can, once you, let's say I buy one and you put insurance on it, and then I rehab it and I sell it, and I say, okay, I'm done with that one. I mean, there's no limit or clause or rule to, you have to carry it for years.
Nope. So the one we do, there's two kinds of policies you can do on a vacant. You can do the vacant policy that we have. It's a 12-month term, and it is refundable. So a lot of times...
Like prorated or whatever?
Yep, prorated. So the investor goes in, gold generally 6 months to get it done and sold. So what I do is I collect 6 months premium up front and say, here, we'll just do the first 6 months so you don't have to pay that large lump sum. If we go over, we'll just pay the next couple of months until you sell it. Some choose to do the full year. I don't, Pine, do you guys require...
If we were to escrow the funds to pay for the insurance, like let's say it's a sweet enough deal and we can roll them in, we'll escrow a full year and pay the full year.
Okay.
And then if they get out fast, then you guys refund.
Because a lot of times what we run into is investors, they just pay the insurance themselves. They don't escrow it in. So usually they want to do the 6 months because that's their goal. After that, we'll just move it on to a monthly basis. Now, if you were to do it on a builder's risk policy, so now, like we were talking earlier, people are doing bigger projects.
Yeah, with new construction.
Right. Well, new construction, or you take the roof off, you're going to put a second story.
Yep.
So on something like that, we can't put that in foremost because we consider that under construction, not just renovation. So in that case, we have to put it on a builder's risk policy. That's a 12-month policy to cover your investment on it. The problem with builder's risk is they're not refundable. So I have a guy I'm working with right now. He does a lot of homes and he puts them all on builder's risk. Well, he only has them for 6 months, but he can't get any of his money back.
Because it's a 1-year term no matter what.
Exactly.
What does a builder's risk cover? So let's say you're doing a project, you or someone you know there's investing and they're doing a bigger project that they call it a pop the top.
Yep.
And do a 2-second story or a new build.
Yep.
And they want builder's risk. Should they have? Does that cover
everything,
damage
right?
from the wind, hail, and fire and all that stuff?
A builder's risk is a comprehensive, and what it is let's say you buy the house for $250,000 when you start that builder's risk. You want to start it at $250,000, and over time increase it as you bring more materials in.
Okay. So if you're listening out there, here's what you learned from just that section from Ben Nelson, Farmers Insurance. There are many different types of insurance policies. Your regular homeowners insurance. There's 2 different ones, if I'm mistaken, Ben, correct me. 2 different ones for just rehabbing.
Yep.
And then there's one for builder's risk. Right.
One quick thing on the builder's risk is they're pretty inexpensive, but the big part is there's no liability on them. Mm-hmm. So there's 2 ways to do it. If you are an investor yourself, you're going to want to buy a general liability policy. Generally, they're pretty cheap. But if you're a regular homeowner, what you want to do is make sure you get listed on there as a secondary insured under the contractor, and also extend your liability from your primary home you're living in right now.
Quick question, Ben. Do I have a general liability?
Yep.
Or do I need one?
Yep.
Okay, good.
All right.
Just making sure. I'm not always up to date on all of those things because you get busy. And
Well,
you
you
got
change so much.
that's part of the deal. We need experts to help you. So go call us 651-400-0773 or talk to InCedasRealEstate.com. Find Ben Nelson's information on there. On this Facebook, you can find it. You can go to the Patriot website and find us there. Tons of valuable information. And even I didn't know if I was covered. Liability.
Right.
I have builder's risk on a couple of things. But I don't know if I have.
And the nice thing is too, also, if you have the general contractor working on it, their liability covers that property as well.
Oh, good. So you're double. You can have
general
more coverage.
liability for a contractor is a blanket policy, so it covers all the projects they're working on.
So we talked about hard money lending. What is it, and how does it work? And is it for you? If it is, please feel free to call, reach out, refer people out to our site, our show number, and our Facebook page, and Sean with Pine Financial, and to see if that would be something that they could look at. I'm sure Sean talked about free classes, happy hours, things that they do to get their name out there and also tell you how it works. Hard money has sometimes a bad reputation because people think of, oh my gosh, it's so risky, and they're going to come and take something from you or harm you or whatever it is, right? I mean, so none of that's the case anymore. You go into it smart, thinking in advance with an exit strategy, and you can make it successful and make money. And if you're super rate conscious, look at the overall deal. If you're not in a position to get a good rate, beggars can't be choosers. So if you're trying to get a great rate on something and you don't have the ability to do it or the resources to do it, just do what you can to get it, even if it means giving up something on the rate to make these deals happen. You should look at your bottom line.
Especially on the hard money, because it's only going to be a 9-month period anyway.
Short period of time.
Right, short period of time.
And always reach out to Lisa Swanson with Envoy Mortgage for any mortgage questions, refinancing questions like that. You can find her on there. And then Ben Nelson, of course, with Farmers Insurance. And then Josh, you and me, correct?
Yes,
as well?
call us. We're fun to talk to.
So upcoming topics. I'm excited for this show coming up very soon. It's either going to be next week or the week after. It is the return of Karnak Jr., Josh Sheeny.
Yep.
He will be on giving predictions for the remainder, or at least the short-term part, 2 to 3 months of 2015.
I've talked to him, and he's got some really good notes. And
he's full costume, and you take that week off, or that weekend off, and then he comes in, right?
Yes, that's exactly how it happens. Yep.
Thanks, guest. Thanks, Lisa.
Thank you.
Sean, thank you so much.
Thank you.
Ben, you're listening to the Stockwell Roueche Show. We'll talk next week. And remember, love yourself and love others. Have a great week.